the Varroc Group. In fact, we will be focusing in on just getting in some market perspective on that. And TR Srinivasan, CFO of the Varroc Group, now joins in to talk a little bit about what has been a fairly stable set of numbers. Thanks so much for taking time out. Can you tell us what has helped you achieve the robust growth despite a decline in the global PV space and a subdued demand in the domestic 2- and 3-wheelers?
Good morning. Thank you for having me on your show, giving the opportunity to talk to you. As you said, the market conditions have been pretty tough in the second quarter, especially globally, because we are supplying to major passenger vehicle OEMs across the globe, and both in Europe and China, the market actually declined due to a number of factors like the uncertainties associated with Brexit, the new diesel regulations in the European Union, as well as the slowdown in the market in China because of the US-China trade sanctions issues. So in that environment, our global lighting system business did pretty well. All the efforts we have been putting in terms of growing our share with our major customers and expanding our customer base over the last 2 to 3 years have given significant results. So we have been able to grow the revenue in the global lighting business by about 24%, which is critical in the given market situation. Coming to India, where our business is focused on mainly on 2-wheeler, 3-wheeler segment, even though the market is growing still, but the growth rate has slowed down compared to Q1 due to a number of factors like increase in fuel prices, the change in insurance regulations, which all led to slower than expected start to the festive season. So combination of these factors, but in spite of that, our major customers are doing well, and we are continuing to grow our share with them. So the Indian business also grew robustly at about 27% in revenue terms. So overall, it's been a strong revenue growth momentum, which we have been maintaining, able to maintain from Q1 into Q2.
What about the currency depreciation? Have you seen the impact of that as of now? There's been a bit of a reversal. So how have you managed on the realizations front as well as margins?
Yeah, actually, the currency impact as well as other general raw material increase, which is also linked to crude prices and so on, have had some impact in our margins on the India business. So we, even though we managed to grow our EBITDA margins, but the growth was a little lower than expected. With all of our major customers, we have agreements in place for price adjustments, which comes with a lag of 3 to 6 months. So because of that, this quarter we had a bit of an impact, but we hope to make it up in the coming quarters.
Okay. Now, can you give us a sense as to, who your key clients are? Because we've seen the client growth at almost 50%. What is the other kind of orders and, revenues that you're seeing from your top clients?
Yeah, in the India side, Bajaj is our biggest customers, contributes to a little more than half our revenue. And as you know, they have been growing quite robustly in terms of volumes as well for some time. And we, as one of their biggest suppliers, we continue to benefit from that. In addition, we also we virtually supply to all the major 2-wheeler, 3-wheeler OEMs in India. So we are also working on and being successful in increasing our share with other customers like Royal Enfield, Honda, Hero, Suzuki, and so on.
Okay, and update us as well as to what the outlook is on your overall pipeline right now. How is it looking, and what is on the anvil?
Yeah, so we are fairly confident of maintaining the growth momentum going forward. So in terms of the order pipeline and the program pipeline we have is quite robust. So the focus is on improving operational efficiencies and margins. So a lot of work is being done in the global lighting system business on that front, which we hope will start yielding results towards the later part of this year.
Right. Could you give us an update on your overseas operations, the commencement of the Bulgaria facility, the update on the Czech plant?
Yeah, sure. The Bulgaria plant is a part of the acquisition we made in July this year. So, we acquired a lighting company in Turkey, and Bulgaria plant, which was under construction at that time, came to us with the acquisition. And that Bulgaria plant is now complete. It will start commercial production this month and start supplying lamps to customers in Europe. The Czech, we have 2 factories in Czech, and Czech is our biggest manufacturing base for the global lighting business. And there we have been expanding capacity over the last 2 years to cater to increased demand from the major OEM customers. And so the growth has been good, but as I mentioned, the focus is on improving operational efficiencies in the Czech operation because of the rapid volume ramp-ups. We had some impact on the margins, which we hope to recover in the later part of this year.
All right, we'll let you go on that note. Many thanks for joining in and highlighting for us what has helped you this quarter as well as what the outlook is when it comes to your overall financials. Margins have improved, top line growth healthy at 3,000 crores. The stock though is taking it easy, down by about 3% as we speak.